A low tax assessment is not the win that you might think it is. It's a warning sign. Sure, you might feel like you're saving on taxes, but it could be completely undervaluing your home, costing you equity, and scaring off home buyers if you ever decide to sell. Look, if you don't take your tax assessment seriously, you could be setting yourself up for financial disaster. Picture this: you're ready to sell your home, but buyers balk at your low tax assessment value, which is just screaming, this property is not worth it. Or worse, you apply for a loan or a line of credit only to be denied because your property looks undervalued on paper. And let's not forget the tax bombshell. Your municipality might adjust tax rates higher, leaving you completely blindsided by an unexpected bill. This isn't just about a piece of paper. It's about protecting your financial future, your equity, and your peace of mind. Ignoring your assessment could cost you tens of thousands of dollars in lost opportunities or even mistakes that you didn't even see coming. We're going to dive into that today in today's podcast, as well as the three biggest misconceptions that are completely wrong that most homeowners have about their tax assessments. Plus, if you find yourself in that boat, well, I'm going to let you know what you can do to fix it and make it right. Who am I? My name is Darren with the German Group, a real estate team with McDonald Realty serving Surrey, BC, White Rock, BC, and the surrounding municipalities. If you ever have questions about your own home or your own tax assessment for that matter, feel free to use the link included in this podcast description to book a time to speak with me and my team. All right, so let's jump into this. I've got a really fun story for today's podcast because this is something that actually happened to me and my family back when we bought the home that I'm actually recording this podcast in right now. We bought the property back in July of 2020. And if you remember what was happening in July of 2020, that was COVID, the first year of COVID, in fact, just a few months after it became a really big deal in Canada. In British Columbia and in the city of White Rock, specifically where we live, while the market at that time was still slow, it hadn't really taken off just quite yet. So, fast forward a few months. In January 2021, I opened my mail. And of course, inside my mailbox is my 2021 property tax assessment. The absolute shocking thing about this tax assessment, however, was the value. Now, before I let you know how completely off it was, let me tell you what happened. The absolute shocking piece of this was how high the tax assessment was compared to what it should have been. You see, homes are assessed for their taxable value in July of each year, and in every year in British Columbia, those taxable numbers are released to the homeowners and the public as of January, about 5 months later. Now, these numbers are supposed to be based on the market value, what the property would have sold for in the market, with no undue pressure on either the buyer or the seller, no undue influence on them, just two people either wanting to buy or sell, putting a deal together in a regular, balanced market condition. And of course, there is no more accurate number to figure out what a taxable number should be than an actual buyer who bought an actual property in the month of July, the exact month when those homes are assessed. You can imagine how absolutely mortified I was when I opened the letter from the BC Assessment Authority to see my property assessed for $160,000 more than what I paid for it in July, which is the month, again, where the assessed values are actually calculated. Clearly, this is completely wrong and not something anyone should experience. Here's some more stuff that you probably didn't know. Did you know that BC property assessments are done without anyone ever setting foot on your property? Assessors rely heavily on computer models, aerial photos, and outdated records to determine your home's value. While this is an efficient method for evaluating millions of properties, it leaves plenty of room for error. Renovations, unique features, or even mistakes in your property's records can go unnoticed because no one is physically inspecting your home. That's why it's critical to review your assessment closely because the system isn't perfect. And those errors could end up costing you a ton of money. Let's talk about the three things that homeowners get completely wrong about their tax assessments and why that is such a problem. The first misconception is that a low tax assessment lowers your taxes. This is what people think. It seems logical, right? If your assessed value comes in lower, it seems to make sense that the property taxes would also be lower on your property, the money that you give to the municipality to pay for things like fire, police, schools, etc. Here's the reality though. Property taxes are based on your home's assessed value as a share of the total assessments in your municipality or neighborhood. If everyone's assessments drop, your taxes can be the same or even increase if your home's proportionate share of the tax burden grows. Think of it like this. Your property tax is almost like splitting a dinner bill with friends. If the total bill goes up because someone ordered champagne, your share still might increase, even though all you had was a lonely salad. In the same way, your taxes depend on how your property values compare to everyone else's, not just whether your assessment went up or down. Imagine your entire neighborhood assessed values dropped by about 10%, but your assessed value dropped by only 5%. This means that even though your assessed value went down, you're going to be paying a larger share of your municipal taxes because effectively your property is now responsible for a larger share of taxes than it was before in comparison to the rest of the neighborhood. The second misconception is that a low assessment value doesn't impact your property. A low assessment might feel like a tax break for most homeowners, but they don't really think about how it really affects their financial flexibility. Let me explain this. The reality is that your assessment matters when it comes to things like refinancing, home equity loans, or even your resale value. A low assessment can make your home seem less valuable to buyers, lenders, or even you. Imagine trying to sell a car that's worth $50,000, but the dealership appraisal says it's only worth $30,000. Buyers see that low number and think, well, what's wrong with it? The same thing happens when your assessment undervalues your home. Buyers or lenders may assume it's not worth as much as it really is. Say you're applying for something like a home equity line of credit, and your lender uses your tax assessment as part of their valuation for your property. A lower assessment could mean borrowing less money, even if the real market value of your home is higher. And similarly, when you're selling your home, buyers who look up your assessment might assume it's worth less than it is. We're going to jump into this a little bit more later on in this podcast, but here's the third biggest misconception that I see across the entire market for both homeowners and home buyers. And that misconception is that the assessed value equals the market value of the property. Guys, this is completely wrong. And so many people treat property tax assessments as gospel, like they are correct. It's easy to assume that if a BC assessment says your home is worth $1 million, dollars, that's exactly what buyers will pay. After all, it's an official looking number from a government agency, so it must be right, right? Here's the truth. BC assessments are just a snapshot of your estimated property's value for municipal taxing purposes from the summer of last year. By the time they hit your mailbox, they are already outdated. They're based on property data from July of the previous year, which means that any market shifts, seasonal trends, or unique circumstances since then are not reflected. And it gets worse. Assessments rely on generic formulas and comparable sales, not even the specific details of your home. Did you remodel the kitchen, add a basement suite? Well, too bad. It's probably not included. Relying on your tax assessment to determine your home's market value, the value that a buyer would actually pay for your property, is like using last summer's weather forecast to plan a winter ski trip. It just doesn't make sense. Sure, it was accurate back then, but it's completely irrelevant to what's happening now. Just like the weather, real estate markets can change quickly, and your assessment is stuck in the past. I've got some good news for you, too. If any of these misconceptions are really hitting home for you by listening to this podcast today, many homeowners don't realize that the assessed value isn't set in stone for their properties and they have a right to appeal. And others assume the process is too complicated and not worth the effort. But here's the reality is the BC assessment appeal process is actually pretty straightforward and it's also free. In fact, I've actually done it for my own property back in 2021. If you've renovated, added value, or believe value should be removed, or if you believe your property has unique features that weren't fairly accounted for, you can make a case to have the assessment adjusted. This means that you're going to want to check your assessment very carefully if you've received it in the mail. And of course, you only have until January 31st of each and every year to appeal your assessment with the BC Assessment Authority. If your assessment seems a little off, gather documentation like the recent sales in your neighborhood, renovation receipts, or even an independent appraisal, and submit a challenge before the appeal deadline. Even if the process doesn't result in a change, you'll have peace of mind knowing that it was reviewed. Look, you should really think about your tax assessment almost like getting a report card. If your teacher made a mistake and gave you a C when you really deserved an A, you wouldn't just sit there and accept it, right? You'd speak up, you'd show your work, and you'd get it corrected. Challenging your assessment is absolutely no different, and it's going to make sure that your property's assessed value actually reflects what the reality is. Look, if you found this podcast helpful or useful, and you think there's more homeowners out there that should get this message and understand exactly the misconceptions about tax assessments for their own properties, or maybe even anyone buying a home who really needs to understand what the differences are between tax assessments and market values, please share this podcast with them and let them know that there's some really good information in it. And if you feel like you didn't quite get the whole story here about market values in this particular episode, there is a video on our YouTube channel that I'm going to encourage you to go search out and find because it's about all of the things that are happening in the next 12 months, the 12 months of 2025, that could severely impact the price of BC real estate. The link for our YouTube channel is in the description of this podcast. These are things that you're definitely going to want to know and you're definitely going to want to pay attention to. I want to thank you for listening, and we'll look forward to catching you on the next episode. Cheers.